Hi, in this video we are going to talk about consumption, investment and returns. Let's say this individual have some money. The question comes is that what are the sources for this individual or any individual for that matter to receive money? The sources could be a business income, invest into a business and receive a money, a job income, doing a particular job or dedicating a time to a company and receiving a money, inheritances from the family tree, other income, maybe doing any other kind of a business activity or transaction which lead to the sources of acting as a source of income. The question comes is that what will an individual do of these money? Just give a moment's thought. Apart from consumption, is there any other use of this money? With any money which comes to your hand, you actually go out and buy goods or services. Nothing else can be done with this money. Now, what kinds of goods and services can be consumed? It could be categorized under the three categories, which are need, which are like food, shelter, clothes, etc. Want category with car, house, or entertainment. And desire category, which is having a yacht or maybe having a private plane kind of thing. Let's say the individual earns money from job income, which is of rupees 100,000 rupees every month, and spends 70,000 for satisfying his need, want, and desire requirements. The question comes that what will he do of remaining 30,000 which he is able to save? He can increase his consumption today. That means buy more need, want, any kind of a thing which he requires. Or else he can save the same 30,000 today and defer his consumption today for future consumption. Now, suppose he do not want to go ahead for increase in consumption, then he needs to save for future consumptions. But there is again a problem. Let's talk about this. So this individual, when he's thinking about for saving for future consumption, so he wants to increase his consumption in his future. Why? Because he is foregoing today's consumption. He also needs to make sure, because prices of goods and services are not same. The chances are because of inflation, the prices will increase in future. So he needs to make sure this his 30,000, which he is receiving today, and whatever goods and services he can actually consume today, is bare minimum equal to what he would be consumed in future. Yes or no? He do not want to risk his money to invest somewhere and actually consume about 25,000 value of goods, which is valued at today. So that means he needs to invest his savings. Now that investment should actually increase in value. That means we are talking about growth, increment, or some addition to the principal of 30,000 rupees, which also requires to be protected and saved from inflation. Yes or no? Which also requires to be protected from inflation as well, because of the price risk we are talking about. So that's what we call the addition as returns. Now, what is returns? The increment in investments, compensation to forego present consumption. The increment in returns in general can be called as nominal returns, which is basically inflation plus real rate of return. And the value, the percentage value to calculate nominal rate of return is current market value of an asset minus original investment value divided by original investment value. I hope you have a fair sense of understanding of what savings, consumption, returns are. Hope to see you in next video. Thank you for watching.